very much so. It's the core. It's the absolute core to my training. I always start off with my charts. Obviously, I read news. I see what's happening in the world, you know, disasters, whatever, bad news, economic indicators and all that. I follow those out of interest. But my key decision-making process is technical analysis. They do, very much so, yeah. Not all of them equally, some are better than others, but above all I'd say with technical analysis, choose the type of charting, the strategies, the tools that suit you. Do not listen to anybody else that says, oh, you don't look at MACD, you're missing out, it's perfect. No, what is perfect is what's perfect for you. And I would liken technical analysis and what you choose to a bit like your dancing partner. You know, what you want is one where you work perfectly in synchrony and you know, you feel like you're a pair on Strictly Come Dancing, you know, and you're just fabulous. And the last thing you want is a partner with two left feet and it's all going wrong all the time. So that's what you're looking for. Those are the indicators that you're looking for, the ones that suit you. Personal preference, and the ones I prefer, will depend on whether my market is trending or whether my market is moving broadly sideways. So it's obvious, a moving average is going to absolutely crucify you in a sideways market because you're always buying high and selling low. So discard that at once. Instead, use something like an oscillator, a relative strength index, or a stochastic, or a MACD in a sideways market. In a trending market, you immediately discard the oscillators because they're going to start warning you that things have gone too far way too soon, and go for something that's sort of trending, a momentum based or a moving average based or a trend line or something like that. The ones I use regularly are RSI, MACD, stochastics and momentum. Those I use regularly, but depending on whether I'm in trending or non-trending, I will choose or not. The other ones I like and I use occasionally are another sort of oscillators. Chaikin is one I like quite a lot. It's not so well known. Certainly mean regression is one I use a lot, and 1.6 and 1 standard deviation either side. That's not so much technical, that's a more mathematical type modelling, but I find very useful when you're looking at very long-term charts. I'd say try not to go down to a too short time scale. Now, the time scale of your charts has to be appropriate for your time scale of your trade or your investment, okay? So there's no point using an hourly chart if you want to invest, say, for the next 6 months, okay? So it's got to match, right? Your time horizons have got to be in sync. But the tendency is people want to be more and more active and find several trades per day, and then they go down to, say, 5-minute charts or even tick charts, and then what you end up with are all sorts of things that just sort of stretch out sideways, and then you'll find that any kind of trend line will be broken by going sideways. I mean, it's just the nature of the beast, and then you think you've got a trade set up to go with, and you haven't actually. It's because of your infinitesimally tiny time frame that you're using. That's the main pitfall.